Joining us from the CME Group is George Cocalis, managing partner for AFB Commodity Trading Advisors. George actively trades commodities, particularly gold and silver. Also with us from Virginia Beach, Wayne Wilbanks, Chief Investment Officer of Wilbanks Smith Thomas Asset Management. Wayne has over 25 years of investment experience in both equities and fixed income. And Wayne, let me start by asking you, since the president's about to step up, sit down, I should say, and sign this bill into law. Did you feel it was better than expected for the bulls out there? Because PIMCO said it was massive stimulus, and a lot of economists raised forecasts as if they didn't expect what they got. And, of course, the payroll tax holiday was really the surprise in there.
I totally agree with PIMCO. This is a giant holiday season gift to both parties. They punted the entire idea of fiscal discipline. So it's $850 billion of pure stimulus, and you got to call it that. It's a stimulus package. So it clearly will add, we don't know yet what the number is, probably 20, 30, 40 basis points to the first half of the year for GDP.
Hey, Wayne, it's Dominic. Are people going to spend this money, really? Are they going to go out there and take this $850 billion in a tax holiday and go and spend it, or are they just going to kind of keep it, pay down debt, or do something else with it?
I think part of it will be debt pay down for sure, but I think some of this money will end up continuing this consumer spending rally we've seen since November. I mean, we're running at about a 4% year-over-year consumer increase, and so you're going to start seeing GDP numbers above 3% for the fourth quarter and probably the first quarter. So yeah, they're going to spend enough of it to make a difference.
Why haven't, the equity markets haven't seemed to react as positively as economic forecasters? We've had some gains, but we can't push up through 1251. George, let me bring you into this conversation. What do you think it's going to take to get us back above those pre-Lehman Brothers levels?
Well, the gold market right now is consolidating right now. I believe that the money managers are very active for two reasons. Number one, they are window dressing. They don't want to be caught without a gold position, especially when you have geopolitical concerns such as North Korea making more threats to South Korea. And also you want to lock in those long-term gains that they experienced all year. So it's a very active holiday going in the last 2 weeks of the year. So I think that the gold market's going to be contained under that 1407 level and drift kind of sideways and wait for a new year for rebalancing.
Just talking about the rise in gold, which is going to rise for a different reason than equities would. Probably the fear of Europe running into that trade a little bit. What do you think about it? You have an interesting take. You're not an Irish bond buyer, but you're saying it's an interesting, maybe even a positive story. Wayne?
Well, on the gold side, we've been very bullish on the commodities and gold, really as much for supply-demand reasons. There's clearly a demand from these central banks, China, Russia, India. So that trade is almost independent every once in a while from the euro. But the euro idea with the Irish, if you don't think that Ireland's going to pay on those bonds, then you really have to question whether you want to own global equities, because I can tell you the market will not respond if the European situation spirals downward. It is not favorable for global equities. So I think it's an interesting, if you're not willing to buy an Irish bond, then you really should be thinking hard about owning U.S. equities.
Hey, Wayne, and Suzanne O'Halloran here. We had AT&T lifting its dividend today over 2%. The yield for AT&T is now 6.5%. What's your take on dividends? Are we going to hear more of this type of thing, especially with the tax situation in Washington?
I think so. The transparency and the quality of these earnings that are coming out of these companies, record earnings, are phenomenal. I mean, all these companies are throwing off huge cash flow, and that's the case you make to own U.S. large cap equities, is they're going to start paying that to shareholders through increased dividends. So all these names you see, you're going to see very nice dividend increases. I'm not sure you'll see as much stock repurchases, but you're going to see 6, 7, 8% increases in some of these dividends over the next couple of years. So that's a very bullish story for the bottom part of equities.